For decades, the US dollar has been the backbone of global finance, but now its dominance is being questioned. Could we be witnessing the decline of the dollar's supremacy? The US Treasury has historically played a pivotal role in global markets, with many nations investing in US Treasuries to stabilize their economies and secure reliable returns. However, recent economic policies, particularly aggressive tariff measures under President Donald Trump's administration, are driving nations to rethink their reliance on US financial instruments. The latest US Treasury data confirms a global shift. Over the past decade, multiple countries have reduced their US Treasury holdings. China, once the largest foreign holder, has significantly cut its holdings, dropping to $767.4 billion by March 2024. Chinese policymakers are now actively reducing exposure to US dollar assets, not only for economic reasons, but as a safeguard against geopolitical risks. Amid rising tensions with the US, Beijing's strategy involves shifting toward alternative investments. If China continues selling US Treasuries, the renminbi could appreciate. Japan, the largest foreign holder of US Treasuries, has reduced its holdings. Recent data shows a decline from over $1.1 trillion. The Bank of Japan has sold US Treasuries to support its currency. India is following a similar path, cutting its US Treasury holdings from $200 billion to $194.3 billion, a 3.07% decrease. The Reserve Bank of India has actively intervened in currency markets to stabilize the rupee amid global volatility. In addition to expanding its gold reserves, India is shifting towards alternative assets. Saudi Arabia decreased its US Treasury holdings by 2.59%, bringing them down to $135.6 billion. Lower oil revenues and the Vision 2030 initiative have led the kingdom to diversify its economic focus. The Eurozone is also adapting. Germany's US Treasury holdings dropped by 2.4% amid shifts in reserve management and changing European central bank policies. Germany is increasingly investing in green bonds and diversifying its sovereign reserve portfolio. Nations are restructuring their financial strategies. They are exploring alternatives like gold, digital currencies, and green investments. Many countries are reducing their reliance on US Treasuries. Despite these reductions, US Treasuries remain a cornerstone of global finance, offering liquidity and stability. However, these shifting investment patterns raise questions about the long-term sustainability of US financial dominance. Foreign official institutions, including central banks and sovereign wealth funds, reduced their US Treasury holdings from $3.8511 trillion in October to $3.8563 trillion in November. Treasury bond holdings dipped slightly from $3.5395 trillion to $3.5519 trillion. Another key trend is the shift toward gold as an alternative reserve asset. Global central banks have increased gold purchases as a hedge against dollar volatility and economic instability. This aligns with the Triffin dilemma, a historical paradox where the United States must run trade deficits to supply the world with dollars, yet excessive deficits weaken confidence in the currency's stability. A look at history reveals how reserve currency dominance can change. Before World War II, the British pound was the leading global reserve currency. The Bretton Woods Agreement of 1944 cemented the dollar's role, initially backed by gold. But since the 2008 financial crisis, the US dollar's supremacy has faced growing challenges. Countries have diversified reserves and increased gold holdings. The rise of digital currencies and China's push for renminbi internationalization are accelerating this transition. As the financial landscape evolves, will the US dollar adapt and retain its global dominance? Or are we witnessing a historic power shift in the world economy?